Hi, and welcome to the X22 Report Spotlight. Today we have a new guest, Warwick Smith. Warwick is a venture capitalist specializing in corporate finance and development for publicly traded companies. He has a background in marketing and finance and formerly served as co-founder and chief executive officer of Western Pacific Resources Corp. Warwick Smith brings with him extensive media contacts and strategic capital markets network built over 2 decades in the capital markets. And if you want to know more about his company, visit wealthresearchgroup.com/USGD, and I am very happy and honored to have Warwick on the X22 Report Spotlight. Warwick, welcome to the Spotlight.
Thank you so much, Dave. Thrilled to be here. Really excited to be on the show.
Thanks for being here. Now let's start off with gold and the mining stocks. For them to rally for the first time this decade, say for 2016, what is the psychological price of gold that will bring back excitement for this sector?
Look, I've listened to a lot of different chartists, and I think that psychological barrier seems to be between $1,375 and $1,400 gold. That's the breakthrough that everyone's really looking for that next big upswing. And I think from there, once you crack through that, then you're going to get that really big push, which is going to be obviously fantastic for gold. But then where you really get your torque and where you really get your leverage is on the mining stocks. Once you crack through that 1,375 to 1,400, I think that's where you'll start to see it come through.
At what point do you think that will hit that area? Do you think it will be this year?
Yeah, look, I'm the ultimate optimist on gold, and I probably have been for too long. But that being said, I think it's 2019. We're already seeing. I can tell you this from if I put my CEO hat on, and for American Pacific, I have seen such a tremendous change in sentiment towards gold companies already from January on. In December it felt like it was hitting all-time lows, and then January it just turned, and you just started to feel like it was going to be, this year was going to be entirely different. So I have to think that with obviously the metals moved up. It's got to get through 1,375 to that 1,400 for that next real big upswing, but it really feels like it's coming.
So at the turn of the century, gold was priced at $250 an ounce and oil around $10 a barrel. A commodity supercycle then began, taking gold higher for 11 consecutive years, along with oil to around $150 per barrel. There's a clear correlation between oil prices as leading indicator for gold and silver prices. So do you see this correlation?
Well, I think it's been true in the past, but I think it's sort of largely assumed by commodity traders, and it's felt somewhat manufactured. I think the link between oil and gas over the last, say, 10 years has become less predictable. The thing is, oil is a supply and demand commodity, much in the way that copper is, right? Where gold is not a supply and demand commodity. It's more like it's a storage of wealth. It's a safe haven, or it's that sort of hedge against inflation. So I think going forward, I think we see both commodities rise. I just don't necessarily see that they're going to rise in correlation with each other.
How much energy is needed to extract gold from the ground?
A lot.
Look,
it's a great question. Mining is energy intensive for sure. Gold mining no more than any other type of mining, but it's also somewhat of a difficult question to answer. When you're extracting minerals, you're requiring a significant amount of energy, but there's all sort of different stages. When you get into exploration, you're using a lot of heavy trucks and what have you, but those are early stage projects. So the failure rate on these early stage projects is somewhere around 98%. I think that's when you're looking for junior companies, you want to try to find ones that are partnered with sort of a mid-tier or a major company, because they've already done all the due diligence on the project for you. But if I get into sort of the production numbers, if you're looking at about $1,000, call it $1,000 an ounce to get gold out of the ground. That's what the average number for Nevada is approximately. Your energy costs are going to be sort of 40 to 50% of that. So you're going to have 20% for sort of executive overhead, 20% for on the ground personnel, around 10% is going to be sort of your miscellaneous. So your environmental, community, social, that type of thing. Your remaining 50% or maybe as low as 40%, it's going to be energy costs. So, electrical, diesel, gas, oil, tires, all of that. So it's a significant cost in mining for sure.
Now, I wanted to move on to the dollar, how it compares with gold. In 2018, the Fed was tightening their books and they were raising the rates. and they raised them about 4 times. And they were planning to raise rates in 2019, but then they backed off. 93% of assets were negative for the year. This is in stark contrast to 2019. Stocks are roaring right now. And I mean, when we look at the S&P 500, it looks like, things look pretty darn good. But yet gold remains around $1,300. It hasn't, it bounces up and down, but it's mainly around $1,300. I saw a stat that central banks right now, they're the biggest purchasers of gold. And we know that Russia and China, they've been purchasing a huge amount of gold. Why right now are the central banks purchasing gold like this? Are they losing trust in the dollar? We see many countries that are de-dollarizing. So what's your take on this?
Look, Personally, I think the whole world would probably like to de-dollarize. I think it's had a stranglehold on many economies for a significant amount of time. What do you buy an ounce of gold in? You buy it in U.S. dollars, and that's no deal different than a barrel of oil or a pork bellies or a pound of copper or whatever it is. It's all in U.S. dollars. So your question becomes, what are you going to replace it with? You're going to use Bitcoins or euros or Australian dollars. I think it's likely none of the above. So, the process is a cumbersome one to deal with, and probably not something that happens in the short to medium term. The only currency that would, trump them all would be gold or silver. But again, I think that's probably a ways out. And if that ever did happen, then gold would get that parabolic move and would never come back.
It's funny. Trump is looking to bring 2 different individuals into the Fed. One Kane and the other one is Stephen Moore. The other one is the one I just mentioned is Herman Cain. And they're both gold bugs, actually. And they like gold. But what's very interesting is that Trump, he's calling for QE4. He's telling the Fed, listen, lower the interest rates, start stimulus again. It seems like the politicians and central banks seem to be convinced that we live in a slow growth, low inflation world, and the printing and borrowing will now bring inflationary pressures. Yet we do see wage growth, raw materials upticks, and real push to inflate. Do you foresee higher inflation down the road?
I think it's absolutely inevitable. You can't continually limit growth and by constantly manipulating interest rates to slow inflation. Sometimes you gotta let these things run. I think we're now entering another banking mess, sort of similar to 2008, where everybody's got a subprime loan on something, and that ends poorly. Trump and the Feds, don't want to halt growth, but the reality is that growth and inflation go hand in hand, and I think that will play out over the next few years. Ultimately, it's good for gold. Look, you can keep printing dollars and as much as you want, but the one thing you can't print is right there. That's your true store of wealth. Gold is your true store of wealth going forward.
I agree with you. Gold is the true store of wealth. And again, you can't just print and print and print. There's when you're using gold, actually, if you have gold as a sound money backing, there's checks and balances.
Yeah.
Because you can't say, okay, you know what, I'm just going to, here's some more gold and let me put it out there.
Yeah, that's right.
Yeah.
A gold-backed currency is certainly, in my estimation, the way to go, and what we'd love to see again. But I was asked recently about Bitcoin as well, and how that would Bitcoin and its relationship to gold is, and I thought that was sort of an interesting question. With yes, there's only a limited number of Bitcoins, etc. And to me, your real store of wealth is gold. Bitcoins are great, and some of the cryptocurrencies have worked out well, and can be interesting trades, and we've certainly done a lot of that through this office. But your true storage of wealth, to me, is gold. Yeah,
I agree. So in the light of the 1.1 trillion annual deficit projected from here through 2028, do you think the dollar hegemony is at risk, and do you anticipate a loss of confidence in it?
I think on paper and theoretically, the answer is yes. The dollar is probably in risk in the long term. But in reality, no. As we sort of talked about before, everything's based in U.S. dollars. There just isn't anything really practical to replace it at this moment, is sort of given my opinion. I think the dollar at some point just ends up losing value for sure, but it'll end up being good for gold. I think it's a gradual process. I don't think it'll be a sudden process. So that's just sort of my take.
Now, I wanted to turn towards your company. I mean, the ticker is USGD.
That's correct. Yeah, the ticker in Canada is USGD, and then the ticker in the US is USGDF.
Okay. Your partner, Eric, that's on board in your company, you guys are the leaders of the American Pacific Gold Corp. You own about, 20% of the outstanding shares? So you definitely have millions at risk. What have been some of the previous successes you've enjoyed, and what has been Eric's?
Look, I'll start with Eric's because Eric's a bit of a legend in the business. Eric's been involved in the discovery of somewhere in and around, between himself and the teams that he's run, somewhere in and around 6.7 million ounces of gold. He was the head of exploration in the Western U.S. for Newmont, which is the world's largest gold company. Eric is a phenomenal geologist, great guy to work with as well. Hopefully he doesn't see this because then he's going to get a big head. But no, Eric's done a phenomenal job. He's a great guy to work with. He did a fantastic job getting us the project that we have now. And now also by bringing in we just signed up a partner named Oceana Gold that we've just brought in. Eric's done a tremendous job for this company. My background has been in mining and corporate finance since 1999. Very lucky to be involved in a few different companies that have done incredibly well for shareholders. So we look to continue to do that and look to do that for American Pacific.
So we talked about mining stocks, and when the time comes for mining stocks, Nevada is going to be one jurisdiction that trades at a premium, and your asset, the Tuscarora, is located there. I understand that previously some $30 million in drilling budgets have been spent there, yet you were able to cut a deal and purchase it for around 375,000 and 800,000 shares of USGD, and already USGD is valued at 11 million. In other words, you bought a property at 1 cent on the dollar, and then shareholders made 30 times that in terms of market cap. What is so unique about this asset, and what can it be compared with?
Great question. Tuscarora, we were very lucky to get Tuscarora, and I'll explain why we were able to get it, and it comes down to the board of directors that we have. Eric Saderholm, who we spoke about just before, is very close with the company that had it before, close with their CEO, as is Ken Cunningham, who sits on my board as well. Ken's been a phenomenal director and an incredibly accomplished geologist in his own right. And because they knew the guys who had it, and they were interested in seeing the asset succeed, we were able to negotiate what we thought was a very good price on the asset. We look at it very similarly to another deposit called Fire Creek. Fire Creek was owned by a company named Klondex that was recently bought out by Hecla Mining for, I believe it was around $420 million US for a couple different assets, including Fire Creek. So it's a project that we're incredibly high on. It's high grade. It's got the right jurisdiction, being in Nevada. Nevada's the Fraser Mining Institute voted Nevada the number one place in the world to be mining. So nice to be in the spot that's number one for sure. So we think we can do very well with the asset. Bringing in a partner like Oceana. Oceana is a $2.5 billion company, so they're certainly a lot larger than us. And they're in production on 3 continents. They're the perfect partner for us. So we're very excited moving forward in 2019.
For those people that don't know, where is Tuscarora? Where is that located in Nevada? Like, where is it close to?
Yeah, for sure. It's about 45 minutes outside of Elko, Nevada. So Elko's the third largest county in Nevada. It's got about 45,000 people that live there. It's Newmont's head base as well. So there's lots of geological mining talent there. Jarrett Canyon, which is a mine that's owned by Eric Sprott, is very close by. I think it's about 10 miles as the crow flies from where we are. It's in a fantastic spot. You can drive its highway virtually right up to it, then you just turn onto a dirt road, which is a couple of miles directly to the project. Power's there. It was in production before, actually. Chevron, the oil company, Chevron and Homestake Mining worked together and had it in production back in the 80s. And now we've got the opportunity to go and sort of follow up and make it a lot bigger.
Nice. And I understand that there's a big company, $1 billion plus company, that is going to team up with you and Tuscarora. That has to be exciting to see. What exactly has happened?
Yeah, so this is news that we're just putting out now. It's a company called Oceana Gold. Their head office is based out of New Zealand, but they've got assets that are in production in New Zealand and the Philippines, down in the U.S. They produce about 500,000 ounces a year with a goal of wanting to get to around 1 million ounces a year. Perfect partner for us. They have a very similar style asset in New Zealand that they've done incredibly well with. We like the guys. Their vision matches ours. We're having them come in, and they're going to spend up to $10 million US to earn 75% of the project. So when you're looking at these things and you're looking for junior mining style companies, it's fantastic to look for the ones that have a mid-tier or a major involved, because they've already done the due diligence for you. A company like Oceana has a slew of geologists and mining engineers who I can tell you, sitting from my seat, scrub the project a great deal before they get involved. So it gives you an idea that you're at least ahead of the game, because you've had somebody do all the due diligence for you. So now it's a matter of getting out and doing the exploration with them, and hopefully creating a lot of excitement for shareholders.
I just wanted to get your personal opinion. I mean, before we mentioned that, gold is going to rise. And if we see gold rising and we see, the mining shares, they start to rise and everything starts to move up, what happens to the dollar?
Ooh, that's a great question, because the last time gold had a significant run, the dollar still stayed fairly strong. So that's probably a question that, a strong economist can answer better than me. But I will say this, it's all going to depend why gold moves, right? So quite often when you get a big move in gold, it's because there's been a bunch of political instability, or there's fear out there, and fear runs from dollars and goes into gold. So that could be the case. And that obviously is bad for the dollar and good for gold. I'm under no illusion that I don't own the crystal ball. I just know that when you're looking at these and you're looking for assets and good companies, you're looking to push forward with ones that we look at and we think, hey, we want an asset we call it bomb-proof to the gold price. If gold went down to $1,000, can we still make money on it? Those are the type of assets we look for. High grade, underground, ones that you can put in production in good and bad gold prices. And hopefully that's what we have here.
So what's next for the company?
Next is drilling. The excitement. First off, what they'll do is they'll run a program called CSAMT. And for those who don't know, it's essentially like a polarization that goes at surface but looks down through the ground. It guides your drilling. It tells you where the veins are and allows that to use that as your roadmap for how you're going to drill. So we'll run that first. Oceana will run that first, because they're going to be the operator. And then they'll come in and use their expertise to drill at the asset. And that's usually where you get your excitement from. And certainly in the past, the drilling here it's yielded pretty spectacular grades in the past. So we're hopeful to get it again, especially in a rising gold market.
Great. Warwick, thank you very much for being on the X22 Report Spotlight. Once again, how can people see your work or get in touch with you?
Look, the website's AmericanPacific.ca, and the stock symbol in the U.S. is USGDF. Canadian is USGD. On the website, people can always get in touch with me there. There's contact information, and always happy to talk to shareholders or prospective shareholders. And thanks for having me on. I've really enjoyed it, so thank you, Dave.
Thank you for being on here. I really appreciate it. Now, if you want to find out more about this company and learn about what they do, visit wealthresearchgroup.com/USGD.